The Broker Series, Broker versus Direct Lender. What is right for your business? In this series, we deep dive into the world of brokers for business lending. Does your business have loans or overdrafts? Are you ready to launch a new business, idea, or product, but not sure how to fund it? These are some of the questions we hope to answer. The first topic to review is the types of finance available. Remember, finance is the mechanism to grow your business's assets. If you need to brush up on assets and liabilities, have a squiz at our videos on these topics. Assets are what drives your earnings, returns, and ultimately wealth to your business. So financing them in the right way can mean optimizing your return on assets, your business's value, or your cash flow. Let's run through some of the finance options available to your business. Firstly, there are a couple of key categories of finance. Number 1, equity. Number 2, bank debt. Number 3, private finance. And number 4, grants and subsidies. All of these are valid types of finance that could be right for your business. Equity. Equity can include cash injections from owners, loans from owners to the business, or private equity, where a firm buys a portion of your business's shares. Using owner's equity can often be simple, especially if you have sources of wealth outside the business. Private equity is particularly useful if your business is growing really fast or you have ambitions to sell in the future. Bank debt. Banks have many different types of debt products. These may include bank loans, which look a lot like home loans, markets-based loans, which are quite sophisticated for interest rate hedging, overdrafts, invoice finance, asset finance, trade finance, and credit cards. The right bank product depends on what you are borrowing for, how long you need the debt, and whether it is secured or unsecured. Private finance. Private lenders typically provide straightforward loans or project finance, for instance, to develop property. Private lenders are wealthy individuals or family groups that lend their money. Their offerings are more straightforward and the loan contracts are drawn up by lawyers. However, they are usually at a much higher interest rate than a bank. Grants. Lastly, grants are often forgotten, but a really useful way of financing your business, often in combination with another type of finance. There are over 500 types of grants, subsidies, rebates, and incentive schemes in Australia alone. So where do brokers fit in with types of finance available? A good broker typically has a range of banks on their panel and can develop a shortlist of suitable banks. They also can be connected to private lenders, which can be appealing if you're looking to negotiate bespoke terms or have a somewhat risky project venture that needs funding. Many brokers can point you and your business in the direction of solid financial advisors that can help with your decisions regarding equity and whether to pursue any grants for your business. Not all brokers are full service, so it's important to know what your broker offers before getting too involved. They should be clearly able to tell you their service proposition and the banks and financiers they are connected with before you engage their services. Brokers aren't mandatory. You can negotiate with banks and financiers without them, should your business have the time and in-house capability. Remember, taking on business debt is a big decision. Make sure you get independent financial advice before you sign anything.